Hello and welcome to Earnings Central. I'm Ritu SIngh. Now, State Bank of India beat street estimates for the second quarter to post an 8% rise in profits at 14,330 crore rupees on a standalone basis. Its core income, or the net interest income for the quarter, rose 12% to 39,500 crore rupees. Other income also rose by 21.6%, but the bank's operating profit fell by about 8% year-on-year. Its asset quality improved, with gross NPA coming in at 2.55% and net NPA at 0.64% for the quarter. It also reported lower gross slippages quarter-on-quarter at 4,081 crores, with fresh slippages at 3,381 crores. The bank's gross advances grew by 12.4% year-on-year and deposits by close to 12%. Joining me now to discuss these second quarter earnings is the man of the moment, Dinesh Khara, the chairman of State Bank of India. Mr. Khara, thank you very much for your time here on CNBC-TV18. We saw a standalone profit growth of 8% during the quarter, but that operating profit decline, what was the reason for that? Where have costs gone up?
Thanks, Ritu, first of all, for having me on your channel. Well, when it comes to the profit dynamics, I would like to mention that in this quarter we have made some one-off provisions, and those provisions are essentially coming from the employee-related provisions, because as you are aware that the wage negotiation is going on, and we expect the settlement to happen in this financial year itself. And with that in mind, we have scaled up our provisions, which we were making provisions at the rate of 10% from November onwards, but now we have scaled it up to about 14%, and that actually took away about 3,900 odd crores. So that is one of the reasons why you would probably see this kind of a behavior. And in addition to that, there are some other one-offs also, which are essentially relating to the MTM write-backs. Last quarter we had about, I think we are, in terms of write-back, we are just about 200 crore this quarter, as compared to about 2,400 odd crores in the last, YOY basis. So that is other reasons why you get to see this kind of a behavior as far as the profit is concerned.
On advances, you've seen a 12.4% growth in this quarter. In the second half, sure.
Yeah, go ahead, please.
Mr. Khara, on advances, you posted your advances growth was about 12.4% for the quarter, and the second half is typically stronger. So what will that mean in terms of credit growth for the full year? What's in the pipeline? Where are you seeing demand?
See, when it comes to the credit growth, we have seen decent growth in retail, we have seen decent growth in SME, agriculture. Only in the corporate we have seen growth of 6.61%, and also in the international book has grown about 8%. I expect international book to grow only about 8% or so, but when it comes to the corporate, I expect that going forward we should see better traction, because we have already started seeing better availment of the term loan limits which have been sanctioned. It has improved by about 100 basis points. And also when it comes to the availment of the working capital also, even that has also seen an improvement. And we have got, as far as the pending availment limits are concerned, there as high as about 1.4 trillion, and almost about 3.4 trillion are the projects in pipeline which are under appraisal, sanctioning process, etc. So I think as the situation, as the time moves forward, we should be in a position to see better growth even in the corporate book. But I will stick to the advice in terms of the loan book growth of we expect that our loan book should grow in the range of 12 to 14%, and that is the kind of the number which I would expect. Though of course this is a busy season now, and now we will get to see some better growth even in our retail loan book also. So I think I expect that 14% is something which we should see going forward.
All right, 14% credit growth for the year. Mr. Khara, margins have come down very slightly in the quarter to 3.29%. In the current interest rate regime environment, where do you see your margins stabilizing, and is there levers for an expansion from these levels?
I think as far as the margins are concerned, part of the increase in the repricing of deposit has already got addressed, and maybe expansion may not be possible. Maybe compression, maybe another 3 to 5 basis point compression could be there, but it should stay at that level. And maybe I would say that there's a possibility we might be in a position to maintain the same NIM.
All right. Your slippages have been coming down for the last 3 quarters, but this 3,831 crores that has come in Q2, where is that from? And if you could give us an outlook for the full year.
Normally these slippages are from agri, from SME, and some bit of it from the retail also. But I would like to mention that out of this 3,800 odd crore worth of slippages which we have seen as on 30th September, we have already pulled back almost 4,200 crore in the intervening period till now. So I think this is an ongoing phenomena. But I mean, our ability to reach out to the customer really help us in ensuring that we pull back the slippages and we contain the slippages too.
Okay. Your restructured and SME books have come down quarter on quarter. What are the trends you're seeing there? Any sort of concern emerging, or are you adequately provided?
No, we are actually more than adequately provided as far as that book is concerned. The behavior is much better than what we expected, and but nevertheless we have not really tweaked with the provisions which we are already holding for this particular book.
Earlier in the press conference, you did say very clearly that there is no concern on unsecured retail lending as far as SBI is concerned. But the larger commentary, especially from the regulator themselves, is coming that banks should be cautious on this front, and CIBIL, etc., saying the sub 50,000 rupee loans are seeing early signs of a potential risk build-up. What is your sense? Where is this stress coming from? And for SBI itself, are you looking to tighten your underwriting standards?
No, we don't have. First of all, when it comes to underwriting, we do have some unsecured loans where the outstanding is about 50,000 or less than 50,000. But we have not sanctioned loans at that kind of a level. This is when they start paying off, and then the balances which are left out, these are such kind of loans. Our unsecured loan book is to the tune of about 3.2 trillion, and our gross NPA in the unsecured book is as low as 0.69%. And also when it comes to the customer selection, we have offered these unsecured loans to our corporate salary package customers, and they are primarily either the government employees, state government employees, military, paramilitary forces, army, or for that matter, the state government or the public sector entities. Almost about 94% of the book is like that. Just about 6% of the book is to the well-rated corporates. They can be termed as blue chip also. So that is the reason why we don't have any challenge. But yes, of course, RBI governor has expressed some concerns, but that could be for the industry in general, and that too for people who are entertaining such requests from NTBs where they don't have a visibility of the customer behavior. But as far as we are concerned, we don't envisage any challenge in this book.
Sir, before we let you go, a quick word on recoveries. You've done about 7,700 crores in the first half. What should we expect for the remaining half of the year?
Maybe a little better. Almost about 8,000 to 9,000 crore is something which we are expecting in the second half.
All right, Mr. Khara, always a pleasure speaking to you. Thank you very much for your time here on CNBC TV18.
Thanks a lot. To all the very best. Thank you.
Okay, so that is as far as State Bank of India's second quarter numbers are concerned. On that note, we're going to take a short break, but don't go anywhere. We're back in just a moment with other earnings. Welcome back. You're watching Earnings Central. Now, Bank of Baroda reported a mixed second quarter numbers with its net profit beating estimates, although net interest income missed expectations. Slippages were also higher during the quarter. Abhishek Kothari is here with all of the details.
Bank of Baroda, it's a mixed set of earnings coming in from there, more on the weaker side. Net interest margin is at 5-quarter low of 3.07% when compared to 3.31% in the previous quarter. The dip or decline in net interest margin is higher than analyst estimate. So strong business momentum is the positive aspect coming out of Bank of Baroda's number. Deposit growth of 14.5% YOY and about 4.15% sequentially. Loan growth pretty strong on a YOY basis, coming in at 17.3% YOY growth and about 3.5% sequentially. Now slippages did increase sequentially to about 4,751 crore when compared to 2,761 crore in the previous quarter. Analysts were working with a number of 5,500 crore with a one-time corporate NPA expected, and that did happen. Corporate slippages did increase to 1,806 crore versus 177 crore in the previous quarter. So there was an airline account which was about to slip into NPA as per Kotak Securities estimate. Gross NPA ratio is at 34-quarter low of 3.32%. The write-offs have been elevated, coming in at 3,409 crore when compared to 2,730 crore in the previous quarter. Other income aided the PAT this time around. Other income grew robustly by 128.5% YOY and about 25.5% sequentially. The annualized credit cost is at 6-quarter high of 0.89% when compared to 0.68% in the previous quarter. However, it remains at comfort level given the fact that it's below the 1% level. In terms of P&L versus poll, the NI is below our poll. However, the PAT is higher than our poll on account of other income that boosted it. Back to you.
Abhishek, thanks very much for joining in with that. Now, staying with earnings, let's shift focus to Titan now. The company's profit and revenue beat street expectations for the second quarter. However, their margins missed estimates. Quarterly revenues was 33% higher, while both net profit and EBITDA grew by nearly 10% in the quarter. The company's jewelry business also saw a growth of close to 19%. And staying with earnings, Indigo has reported its second quarter numbers as well. The airline posted a profit of nearly 189 crore rupees compared to a loss of about 1,600 crore rupees in the same quarter last year. Their revenues were up 20% of nearly 15,000 crore rupees. Margins also expanded to over 16% compared to under 2% year-on-year. The airline has warned that more aircraft could get grounded from the fourth quarter onwards because of the Pratt & Whitney engine issues. Now, staying with earnings, shares of Zomato ended yesterday's trade nearly 9% in the green, and this after the company's net profit expanded to 36 crore rupees. The company's revenues, they rose by 18% on a sequential basis, led by its food and quick commerce verticals. The company's market capitalization also hit the 1 lakh crore rupee mark for the first time since January of 2022. So in summary, this earnings season has been a mixed bag so far. About half of the companies in the NSE 200 index have reported their numbers so far. Prashant Nair is here with a mid-season earnings report card. Prashant, over to you.
We take where earnings expectations for the full year were exactly 1 month back, which is right before the first earnings came through, which was TCS this time around. How has the earnings expectation changed as earnings came through for the full year FY25? We're taking not 24 because I mean that's largely in the price, and now of course expectations are moving to looking at FY25. So roughly around 100 companies have reported so far. So we're looking at the universe is NSE 200. 100 have reported. 58 companies have seen earnings downgrades. So more downgrades than upgrades. 39 companies have seen earnings upgrades coming through. Let's dive straight in. Which are the companies which have seen the top earnings upgrades to full year FY25 earnings over the last 1 month? So look at this. Unusual names. IOC and BPCL rank as at the top of the list. I mean, IOC especially. HDFC AMC, HDFC Life, 7.5% and 6.5% respectively. JSW Energy, 11.5%. Dr. Reddy, some 8% upgrade to full year numbers. Maruti, Dixon, and of course KPIT. You guys were talking about KPIT earlier, and KPIT indeed has seen one of the few, actually maybe the only company in the IT services space which has seen earnings being taken up by consensus. Let's get to the downgrades now, and this is, I would say, a bit of a predictable list, right? Look at the top, the first 4 names there: UPL, SRF, Naveen Fluorine, and maybe throw in a Loris Labs as well. But the first 3 are pure chemical companies, agrochemicals, etc. as well. But sharp earnings downgrades, and these are stocks which are completely bombed out already, and they're seeing massive earnings cuts to FY25 numbers still. Laurus Laboratories has been a perennial disappointment, 12% cut there in terms of earnings. You had Syngene, which saw cuts. ICICI Pru, Max Financial were some of the others which saw earnings expectations being brought lower. These are banks, right? Federal, Kotak, HDFC Bank. And this was surprising because, I thought maybe it's all... banks, by the way, for the last 3 quarters have not seen upgrades. But they did not see downgrades as well. But this time we are starting to see some downgrades come through to full year numbers. And it's a high interest area. 30% of the weight is banks. And everybody's waiting for that part of the market to fire. Adani Wilmar, Jubilant Food, QSR, of course, is seeing some pain. Tata Communications, Petronet LNG, Sona BLW, and Emphasis are some of the other names which saw downgrades. Just to wrap it up, what are we seeing? Discretionary growth remains very low. We've heard that from company after company. Rural demand remains subdued. There is hope that because of the festive season, state election spending, etc., this will pick up, but so far subdued. B2B segments, business to business segments within categories, within companies are doing very well. And that largely seems to be a function of government capital expenditure. And lastly, export volumes have been a little subdued as well. Because, the biggest market, the US, for example, has been in a no man's land. It's growing well. It's expected to slow down, but it's not slowing down. So as I remember the conversation with Gokul Das Exports, they said, well, we're waiting for some sort of a slowdown. And that's the reason why their clients, large retailers, are not stocking up yet. Perhaps that will change as we get into the next year. So 50% of the earnings done, 50 more to go. But the verdict in the first 50 is actually quite mixed.
Prashant, thanks very much for that earnings report card. Now sticking with earnings, but this one is from the unlisted space. EdTech giant Byju today reported its long-delayed earnings for FY22. The company, in a statement, said that it had lowered its EBITDA losses to 2,253 crore rupees in FY22, compared with 2,406 crores loss that are reported in FY21, which is a reduction of about 6.3%. Now, this comes after the company's founder and CEO Byju Ravindran had earlier claimed that the company is on the path to achieve profitability by financial year 2024. Now, Byju's in a statement today said that the audit report submitted by its statutory auditors BDO is unqualified and clean. Meanwhile, its revenues rose to 3,569 crore rupees, above the 1,552 crore rupees that it had reported in the preceding year. Now, talking about these delayed earnings, Byju Ravindran, which is the company's co-founder and group CEO, said, and I quote, "The takeaways from a uniquely belligerent year, which included 9 acquisitions, are lifelong learnings. The core business has demonstrated good growth, underlying the potential of EdTech in India, the fastest growing major economy. I'm also humbled by the lessons learned in the post-pandemic world of readjustments. Byju's will continue on the path of sustainable and profitable growth in the coming years." End of quote. Okay, that is as far as earnings in India are concerned. In global earnings, Apple reported a revenue loss for the 4th consecutive quarter. The iPhone maker is also expecting a seasonally strong holiday quarter to be a dull one. But iPhone sales in India hit a record high. Hormaz is here with more on Apple's earning fine print.
Well, absolutely, and it's pretty much the same as what they said in the last quarter as well with regards to India. They continue to maintain that India remains a core market. But before we get to India, I'll take you through the numbers. And as you said, it was the 4th consecutive quarter where revenue declined for Apple. And this is the streak, the longest streak since 2001. And that is not where the bad part ends, because the management also said that the December quarter revenue, which is the holiday quarter, is also going to be flat year on year. And that is particularly bad because it's the holiday related quarter. People do a lot of shopping, and analysts were also projecting a 5% revenue growth from Apple in the holiday quarter, but the management said that it is going to be flat. So what is bothering Apple at the moment? The bothersome factor is that one of its key market is facing a lot of issues, and that is China. And China is its 3rd largest market because 1/5 of Apple sales come from there. It is also its largest production base, and they have been slowly losing market share there. For this quarter, the revenues from Greater China were the lowest since the middle of 2022. And that is what is bothering them. And why is that so? And that is because of Huawei. Because Huawei, the US and China are already facing a lot of issues with regards to technology sharing. and Huawei slyly launched their own smartphone in August, which contains a lot of these features, and as a result of which Apple is losing market share in China. But Tim Cook seems to think otherwise. He told analysts on the earnings call that it's all hunky-dory over there, demand is good, sales are fine. He attributed the weakness to the underperformance of the Mac and the iPad. Now coming to India, which as you said was the silver lining, they said that the iPhone revenue was a record high in this quarter as well. And India is an incredibly exciting market and a major area of focus for the company. And they said that since they have a low market share in the country, they have plenty of headroom to grow. And lastly, they said that a lot of people moving into the middle class and increasing distribution reach is also going to boost Apple's prospects in the country. So all in all, India did well. A lot of other emerging markets also did well. But the core, one of its key markets, is facing issues.
Hormaz, thanks very much for bringing us the latest as far as Apple's earnings are concerned. Now, premium coffee chain Starbucks also posted a strong quarter, surpassing street expectations on all fronts. This is on the back of a higher number of transactions and larger orders as well. Their net interest income rose nearly 40% from a year ago, while sales grew 11%. Starbucks also said that it plans to add over 17,000 stores by 2030, while cutting costs by $3 billion. Okay, so that's all we had on this edition of Earnings Central. Thank you very much for watching, but stay with CNBC TV18 for all your news and updates.